Hey guys, welcome to another video through CGIM. We're going to go through an analysis on the X factor and a couple of pairs that we're looking at. One is the dollar yen that's about to set up for a long potentially, and I'll go through another pair here. I'm going to also show you another trick that you could use to enter into positions when it's already taken place, where the initial signal has gone, and you want to catch a move like this, because as you can see, we took the initial move, we got stopped out both times because the dollar yen is one that triggers on a cross smoke close, as we teach in the course, which is this dotted blue line here on your chart. So let's take a look at what happened with this trade, and then we'll show you how you can enter on the X factor indicator without the strategy tester signaling an entrance with a little bit of reliability for yourself so that you feel comfortable taking the trade. As always, take trades according to how you want to trade, using your risk management procedures and what you've tested and what you're comfortable with, and risking how much money you're willing to lose in case you do lose a trade. So keep that in mind. So let's take a look here. As price came through, there's a trigger here where we've got both the bearish button and the red H4SG line. The bullish H4SG has been stepping down, not very steadily. It's actually sort of gradual, but what you can see is these H1SG lines are very short, which means that there's not a lot of strength either way. And when the H4SG is gradually stepping down, it's also showing that it is losing strength of the bullish sentiment, but it's not really drastic like you see over here. Very clear representation of some strength coming in with the bears, because these are making solid steps, which means it's pushing really strong. As well as you can see these H1SG lines have a little bit more angle to them. So right here we took a position because we had a signal in price chart data that we got with our indicator. We broke across the smoke and we had a good long push here down to the downside. The H4SG turned red, which means that the candle closed across the smoke on the 4-hour chart, which means that this line turns red when that happens. If it closes above the smoke on the 4-hour chart, your H4SG will be green. So here we have that bearish button, the red H4SG, and the flag. So that's our entry combo. So of course we take a position. And the smoke angle actually did really well for us. It started to go downwards pretty decently, gave us some width, which is nice to see. And what we just didn't have is a continuation. It found some sort of support here, which it didn't want to continue to push, and the smoke tapered off and ultimately flipped on us here. So it came back in, and you can see right where that took place here, where we thought we were going to have a really good bearish push, where it came in, and then whatever changed. I can't remember if there was news exactly or whatever on the 8th or 9th of September. But that's what happened, and it totally switched on us. And you can see these steps here, they're pretty drastic. They're not gradual whatsoever. So there was a lot of strength moving the opposite way. The H1 on the bearish just tanked. So technically we could have exited with a hill crest if you trade this just as a bear indicator and not use the strategy tester signals. You would have had a hill crest exit right here as the H1 tanked down and started dropping drastically to the downside. So you would have exited pretty close to break even. Other people that are conservative with this method would have exited with a cross smoke, where it comes across the smoke pretty drastically, and you could have exited there as well. But that's up to you, and as you get more and more used to this indicator, how you want to trade it. So the strategy tester continued on, though, because we let it just run so that we get real data and we don't take random exits. We just let it exit according to the rules. So the first exit here, this was technically one of the positions that exited on a cross smoke close because the candle closed above the guide here. So that position was exited. And then we either let the other one take a loss or a take profit. We just always let those run so that we let the trades play out, which it did here. We took a stop loss. So now what you'll see as I move this out is we don't take any other positions. And a lot of people are looking at this chart going, it would have been really nice to take a position here and to pick up this downward move. And the reason is because in our course, we teach that as the price moves, this looping effect comes into play. And I'm just going to get rid of the smoke gap indicator so I can show you this really clear. We teach that as price reacts to the smoke and it bounces away with tests, whether it's a soft test or a hard test, we get this looping feature where it comes across and then it comes back in. And it typically does that when the smoke gets really, really wide. So you have the big loop here, and then you see these small loops coming in as it comes along. And as we see these, we always know the price is going to come back and test the smoke. It just has this rebound effect. And if you're a member of the CGP course as well, you're going to notice that when price reacts to the 1-4 line on the CGP pattern, it's very similar. So this should look really similar to you. So the question is, we didn't have a signal anywhere in here that broke short, even though we have these bright red candles that are showing a drastic move to the downside and lots of strength at the bears. Why didn't we get a signal? Well, one thing to remember is that inside the coding of this indicator, there's some things that say that has to happen to show that it is a trend breakout. And if it happens too long after the initial move, it's not going to signal you, because it's not every day that you get this massive push, and you don't want to enter the push here if the push only went to here and then comes back up. So what it does is it detects if there's a trend breakout, and then it doesn't alert you if you're too far deep into the trend, so that you don't jump on a train that's basically at its station. Excuse me. So what we want to do to figure out how we can enter this and still use X factor as a valid indicator without the strategy tester having to alert us. So you're going to have to be looking at your chart a little bit, but that's okay if you've got the time. You can even take a peek at this every 4 hours or so and see where price has moved. We entered this period of consolidation here, and then it broke out. As you'll see with other things that Tassos puts out there and some of our other strategies that we teach, you're going to have an EMA 200 line that's based on the high-low close 3, and that basically washes out a lot of the noise in the market. So just throwing that simple thing on your chart will give you a little bit extra information. And I'm not saying to put this on your chart and then just start trading it based on some magical line. You need to look at what price is doing. You need to be familiar with the pair that you're going to trade and figure out what it does in relation to this EMA 200 line. Don't just throw it on there and expect price to just magically work for it. But I'll show you what we've got going on here. So we color it however you want to color it, but the inputs, again, it's a 200 length with an HLC3 as the source to wash out some of the noise of the highs and the lows. And how do we enter? Okay, so if we don't get a signal with the strategy tester with X factor, if that's all you're running on your chart, you can still use the candles to your advantage and the things that we teach you in the course. So one, when the candles are gray, don't enter. This is a period of consolidation where the candles are flipping back and forth between red, gray, green, red, gray, green. It's undecided. It doesn't know where it's going to go. And gray means stay away. That's pretty much the easiest way to do it. Secondly, you want to look at the smoke. What's the smoke telling us? Because that's strength and direction of the market. So when the smoke is flatlined like this and has no angle and no width, it's telling you there's absolutely no trade there because you're going to get stopped out. You'll take this bright red candle here and think that you're going to have a nice push, so you enter on the close, and then you're ready for it to tank down because we had a smoke flip and you're ready for the smoke to open up and give us a bunch of width here and go south, but it really doesn't. It's indecisive, as you can see by this gray candle in here. So you get stopped out because you put your stop above the candle and you're waiting for your take profit down here and you get triggered out. So then you're out. Just like dollar CAD did to us last week, we got a lot of whipsaw. Unfortunately, we did get valid signals with that, and that's just part of that pair and its behavior. I know that about that pair, and you should know that too if you're trading it. So as we come through here, we get to the point where no longer do we have a flatline smoke, and it does begin to break down, and it does begin to give us width. And you can see the width right here as the smoke opens up. So how do we enter using this information? Well, we've broken below the EMA 200. So that's one sign that we've kind of come across a dynamic support system here. And like I told you in our course, when we come down in the smoke and we make this loop action, we very, very much expect price to come back and test the smoke. Now, if the test holds and we have great angle of smoke and we have great width in the smoke, then it's a little bit more confident of an entry where we can continue that direction. So as price comes through here, you see that our candles become red and solid bright red, which gives us a good indication the price is strong to the south direction, to the downward direction. The smoke has angled down, and we've got some good width here, and we're below this EMA 200. So we cross through this, basically this dynamic support where if price would go the other way, it would come out of this EMA and come off of it if it was going to continue bullish. But since it broke below it, we have a pretty good indication that now we're actually on a good move. Another way that we can look at this is where we broke these recent lows and have come out of kind of this consolidation area. So you can draw a box, you can draw a line, you can do whatever you want to do, but you can see that price has tested this consistently and it's now broken out of it. So the entry is kind of up to you and where you want to go. There's no clear rule here. So if you're the person that has to have an absolute, if price does this, then do that, you're not going to find that here. I'm just showing you an example of how you can enter a trade where you can use this information. So as it comes down and it tests the smoke here, you could take entries right at the smoke, knowing that this smoke with this angle and width looks a lot different than it has in the past. Okay, and typically what you can see with the dollar pairs is that you usually see about a 25 to 30 pip take profit once it takes off. That's what most of our settings are. On the dollar yen, it's a little bit different due to backtesting and where the trend breakout settings are. But as we come up here and test the smoke, you could probably set a 30 pip take profit in here, and your stop loss can either be dynamic with just above the EMA 200 or some recent highs here, and then look for a target down below. Obviously, in hindsight, we can see that this continued to move south, but you can just kind of gauge what it looks like as it comes into the smoke here and it's broken this support line right here. That's a good spot to consider a short trade as it starts to bend over and go down the other way. To continue on, if it's continually the EMA 200 is moving downwards and price is not breaking through the smoke, but instead making a hard test here like a pullback, well, then you can enter on the next test. So don't enter here because you're far too far away from the actual spot where it tested the smoke. If you enter here, you're very likely that it's going to just make its loop and come back into the smoke right there, might come back over and make a pullback, and you'll get stopped out. What you want to do is wait for it to test that smoke again. So entries, if you cut the first one, it would be here after you broke this low here. So you'd hit the close of the candles. You could enter anywhere in here on the smoke and take the move down. As it comes up here and comes back across, you could enter. As it's come back down south, because this is a hard test of the smoke where it came up but then rejected and came back down. Make us a loop. You could enter here if you want. It's a pretty soft test. I'd be hesitant to see where that goes, but as it comes in here and stops with this candle and stops with this candle, you could take an entry here. And it comes down, another test. I'd wait through this because it's quite a bit of consolidation and price is sort of not coming down a little bit more. But as the smoke continues to bend and come back down this way, you could take an entry at the close of that candle because it's showing you now that the smoke didn't taper off. It didn't close and then come up with a flip and give you green. So it's showing you that although these did test the smoke, it's still open. You can see this width here on the smoke is showing you there's still strength in this overall downward movement. So we can hang on to that. We could take entries in here. Gray, you're going to stay away from that. If you took a breakdown here, you could enter, but this would be a more risky trade because you're finding this support zone right here. So if you see gray, you're going to want to stop taking good looks at it. This would be a risky entrance here, especially because the smoke starts getting pretty skinny here compared to where it was wide the entire way down here. And then taking a look at dollar yen here, another thing I want to show you is kind of what it looks like to continue on. So I'm going to bring the SG indicator back on and show you what this move looked like as a whole. All of this information is coming down here. Look at what your H1 and your H4 SG indicators are telling you. You've got bright red candles the entire way. There's no gray. It doesn't switch to green. The smoke never tapers off and gets tight. It never flips. It's coming down here and it's going to flip here. But the entire time you can see these are not gradual steps. This is the most gradual here. But as it comes up, it's very, very steady stepping up. It's not shy about moving up whatsoever. You've got decent angle on the H1. And the minute you cross this range line in this H1, it tells you there's good strength here. So it comes up, you've got good strength in the bears, which propelled this down. And these H4 steps are what's really making the difference. It never turns green. The H1 stays above and reacts to this range line. Now, as it starts to break here and gets lower, this is telling us things are starting to kind of switch around. And something else you can see, as it breaks below this and comes down to this low point, it almost hits this 0, but it doesn't. And what it does during this time is it also flattens out on the H4SG. At the very moment that this flattens out on the H4SG and this breaks down below the range line, look what price does. If we line it up, H4SG gets flat right here, H1 breaks the range line here, and then starts to go down, and look what price has done. It's pulled back and it's given us gray candles. That's an indication that the bears potentially at that moment are losing strength. So what we want to do is be very careful with a bearish move here, but keep our eye on that price and the H4 and H1SG indicators. It breaks back through the range line. Obviously, we had a good push, and the H4 started stepping up again. But overall, look where it's at. Just like you would look at highs on the wicks of candles, look at the H4SG. Is it going up or is it going down? Right? And if you say that it's going up or going down, then that's kind of an indication of the move. I'll make this big enough so that people can see it. But look what it's doing. It's plateauing, and it's sort of wavering. It's not really gaining or losing. And then now we have a switch here where it's turning green. The candles aren't closed yet on the 4-hour candle. We have to have this first step come across, just like we've taught you in other videos and the course. You've got to wait for this candle to close on the 4-hour, and I'll show you what that looks like. So it's come across here, and the candle's moving. It's 43 minutes until close. So it's up above the smoke line, but it's not closed yet. So that actual step is not quite valid. We have to wait for that candle to close. So that's a good way to check, is just look what the 4-hour is showing you. But back on this, so this is turning green, and we do have, I'll go back to the 1-hour. We do have a green button that's printed. Now the button, to be valid, has to be closed as well. So we're at 42 minutes, but the smoke width right here is 0. That's pretty much what presents, or what publishes a button here, is when the smoke flips. So what we're looking at here is a switch in the price and conditions. You can tell the price is also starting to challenge this EMA 200 line. So for an entry long, what we need to do is we need to have these candles continue green. Bright green is the best. We need to have that flag present itself. Once we have the flag, we've already got a button, so we have our entry combo ready to go as long as we get a green H4SG coming through here. To enter, what we want to make sure we have is the smoke continues to move up and begins to get width like this, so that as price moves, it shows good strength and it causes that loop that we've been talking about. If this is our price, we want that loop to form in here between the price and the smoke. We don't know that that's going to happen, obviously, until it happens. But what you want to see to make sure that it's a valid trade is that these things are actually taking place, that this green, I'm going to draw it a little bit better here so you can see. You want this step to be green, and you want it to be decisive. You don't want it to be in doubt whatsoever. So you want this is overall bearish, right? The H4SG is overall bearish, which is why it's red. That's okay, because sometimes the better entries are when they turn here. So we want this to be green, and then we want a green step to go down. That means that the smoke has switched on the 4 hour. The price is closed above it, which means a good chance that the trend is going to switch on the overall time frame. And we want these steps to be very drastic and severe, which means that the bears are really, really losing strength quickly. When we have that, this will come down at some point and give us an overall sentiment change, and then we want those steps to step up like this, really severe, to the green side. Now this doesn't always happen, but this is what you want to see when you're on the indicator so that you know that this move is valid and is going to continue. So we just had the button. We're going to wait for a flag. This is a potential long entry. As soon as we have the flag, we're going to confirm that we have a green H4SG here and we can take a trade. Something to consider. If this H4SG stays like this and then comes down just shallow like this and then sort of just stays in this plateau range, it's really tempting to want to continue the trade, but you want to consider what the price is showing us too and what smoke looks like. If the smoke starts to taper off, we probably want to get out of that trade because, again, this line here is a plateau. We want to break out of a plateau, and we want that H4 to be moving strong. You want to see, once you enter the trade, you want to see big steps to the downside of this bearish H4SG, because then it means the bears are losing strength, the bulls are about to come in and take off. So based on the SG indicator, that's what you want to see. We'll take a look and see what the chart gives us as a whole, but that's what we're looking for. So for an entry now, we got the button, looking for that bullish flag, and we're going to confirm that the H4SG is green. All right, now we're going to go to the pound. I'm going to show you a couple other things, just like we talked about the other one. This did the same thing that the dollar yen did. Get rid of that real quick. Where we took 2 stops basically because the pound is the pound Swiss is based on the Hillcrest exit. So right here on our SG indicator, we had a Hillcrest. It came over and it stopped us out. Now, of course, this did continue, but the system is designed to get us out of the trade before we lose a ton of money. So it got us out right here when the Hillcrest occurred. Granted, we didn't know that it was just going to flirt with the zero line and then take off pretty well and then go into this massive bearish trend, which is fine. But let's talk about again how we can re-enter. Just like the dollar yen that we looked at, price moves here and it comes down, it forms the loop, and then we expect that it's going to come back and test the smoke, which it does. We look at everything else involved. The angle is very good, the smoke width is very good, so we could take an entry on the close of one of these candles somewhere in here, and you can continue to write it down. So I'll move this a little bit more. Same thing with the test here. Now, like we talked about before, if you come in and you take this loop here, you're going to get a quick hit pretty fast, and then you wouldn't know to exit right away. This would be a really tough trade to make because the bears are still very strong here, and it tapers off without us knowing it. But kind of looking at these lows, you just want to keep in mind where it's breaking prior lows. So here it doesn't even have a low that it breaks. Right here it breaks across this low, which is good. So you'd pick up there, but here it didn't. So you'd kind of wait. This doji candle would be pretty telling as far as what you might want to do. This is all based on just bear indicator trading though, so you just kind of use your knowledge of Forex if you have it and the price charts to make decisions there. And then we go into some gray candles, some dark red into some flat gray candles, and then green, where now price is undecided, the smoke is completely flatlined again and you don't want to move. So this one as well, just like the other pair, has some trend breakout indications inside the indicator that said it did not do what it needs to do to show you a great strength for a trend switch. So we're kind of looking here. Now what I'm going to do with this pair is just like dollar yen. If price decides to come up and break through that EMA and it gives us that total trend breakout signal, we'll get a flag here, and that will come with the H4SG and the H1SG being the proper colors too. But it's not going to do that for quite a while, and the reason I know that is because it's not trending. So we had these really crappy lows that it didn't break. It didn't set any new highs though. So the system is detecting that it's not making any new trends, and we've got these lows that this price is kind of bouncing around. So it's not going to do a signal until the H1SG comes down and turns green. We get a green H4SG, but then it's going to have to break out pretty severely across the smoke and through price with a good amount of strength upwards to give us that flag. If it doesn't do that and I want to trade the pound Swiss with X Factor, I'll do exactly what I talked about with the dollar yen, only this is a little bit earlier than the dollar yen, so I'll show you what I mean. Up here we talked about consolidation, right? Consolidation comes in, we don't get a flag because it hasn't broke out. All the H1 and H4s are extremely flat. There's no movement, no strength. Okay, it breaks down here and it starts to test the smoke, and we just crossed and now we're below this EMA 200, right? Then it came down and it tested the smoke, and then we took a good long bearish run. Well, look exactly what pound Swiss is doing. Consolidation. Although pound Swiss can move with these bigger candles, we broke across and closed below the EMA 200. The smoke is starting to come down. So this is literally exactly what I talked about here. Broke across, starting to come down. Like this candle is exactly the same as this candle in sentiment. Now what I know is these pairs are different, so they're going to react differently, and I'm not just going to trade it because the dollar yen did it, but we're getting bright red candles. The H1SG has turned up a little bit. We've crossed the range line, so there's strength in the move. What I want to see happen is a break below this line. And what will happen is the smoke will continue to move down in an angle. It might consolidate a little bit here, but I want to keep this width wide. Even if it does come back, I want it to stay wide like this so that it doesn't cross and give us a smoke flip to the upside. And these candles I want to see come in and test the smoke. And when it tests the smoke, I want to see rejection or some sort of reaction there. And then I'll enter on the close of a candle that comes away from the smoke, and I'll look for taking profits before it comes back and tests the smoke again. So there's a lot of drawings on the chart there. Let me just go back up. Same thing here. It came back, tested the smoke. Everything moved here. It's going the right direction. And as it tests the smoke and comes away, I'll enter on a close that broke the prior lows. That's a pretty good signal that it's going to move down. Then we come back and make a loop, test the smoke again. We could exit, see what price does here, take a close, and you could enter again. You could even enter on this candle, take a trade. Stop loss would be somewhere above the smoke here, comes down, and you could exit here. So it's just a way that you can ride the system down if it continually puts in these moves. Now the fact checking all the way along is that the H4SG is moving your direction. So if you're looking to take shorts going down, you want to make sure the red H4SG is going up. And that's how you couple these two things together. So looking at pound Swiss, this is a very accurate pair. One of our members, he was a few weeks ago, he was 100% on this pair. I don't know where he sits now, but that's exactly what he does. He looks for these clear entries and then he just continually moves on them. So to enter short here, we're going to wait for it to come up and test the smoke. A rejection of the candles coming away from the smoke with a close that's below that challenges this line here. We want to challenge that line. So our close needs to be down here somewhere that broke across decisively. Then our H4SG down here needs to be red, and it needs to start stepping up solid like this so that we know that the bears are gaining strength. It should happen because this H1SG has broken the range line. It's got a pretty good angle up. Now it might come down and even react to the range line and continue up. Who knows, like the other chart did. But as this bullish H4SG is coming down in strength here pretty decisively, it's eventually going to hit this zero line. And when it hits the zero line, we're going to have an overall sentiment change where it turns from green to red. And that right there, that moment that it turns green to red is the perfect opportunity to get in, because this is reading the overall sentiment of the 4 hour move. So when it comes down and gives us that, we want this H1 to stay red and stay up high. We want this H4 to come down. We want the body of this H4 to turn green or red, and we want it to move up nice and steady. When it does that and it's breaking this these support lines, coming up and testing the smoke, that's where we want to take our entries. Make sure all that's cleared up. So those are the two pairs I wanted to showcase. Just something you can do is throw that EMA 200 on your line, on your chart. If you don't know how to do that, just go to indicators, type in moving average, exponential. When it pulls up, it'll give you this line right here. It'll automatically have some defaults. Again, go in here, change your inputs to the 200 length and the HLC3. Don't do any of these because this is our coding for the SG2. It won't do anything. It'll just put it on the very bottom of your chart, which does no help. So make sure it's set to the 200 and it's based on the HLC3, and color however you want, and then use that, and look how price really reacts to it. So it's just some extra indicators. If you want to use this X Factor bear without the strategy tester, it only takes trades that are specifically set for the rules. It does not vary from those rules, so you're going to miss some opportunities. But in doing so, it does pretty well. Where this is set from June, I believe, until now, 64% accuracy rate. Since June, the system's taken 28 trades for 13% profit with 3.95% on the max drawdown. So pretty good rate there since June, which is across the summer for us here in the US, where markets typically get slow. So, all right, just want to show you guys that. Plenty more videos coming, a lot more content that we're going to put out there. We're going to start some extra videos to talk about some structure, some support and resistance, what RSI does, a couple candlestick formations. We don't teach too many candlestick formations here, mainly because our strategies don't use them specifically, but what we do want you to know is what wicks mean, and so that you can see open and high and low and close, and what rejections are, and what the wicks mean, because we do use the wicks when it comes to the smoke, as far as soft tests and hard tests, and where you can see some of that pressure, whether it's sell pressure or buy pressure. But we don't want you to focus too much on candlestick formations, because people can trade them differently, and you might take a doji that does something one day and it might not do the same thing the next day. So we don't tend to heavily trade on those too much. So if you have any questions, hit us up in the Discord channel through X Factor, and anything else, we're happy to help with you. Hope that you trade green, and we'll talk to you on the next video.